following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely love being here with you. I treasure your presence here today, and my outcome is to help you to become a better money master. But mostly, folks, it is to help you. It is to help me, each of us, lead an inspired life, folks. Why? Because we want to take a look at all those tools that we need out there that pave the way so that we can lead an inspired life. Let's go take a look at one of our tools. This tool, folks, is really the overall global tool out there. This is the tool I call your beliefs and your rules. You see, all of our decision-making process, you, me, everybody, all the folks that you deal with out there, it's all really controlled by two things. It's controlled by their beliefs and their rules. What do I mean by that? Take a look at just simply, how about your home? Take a look at your home. Maybe you got up this morning, you turned on your lights. Maybe you turned on your computer. You know, you had a belief that it was going to work. Why? Because of your rules. The rules said, hey, I know if I throw this switch out here that the lights are going to go on, and if I throw it in one direction, it's going to go on, and the other direction, it'll go off. Because that rule, folks, that is your wiring. You're wired in your house. You've got wiring in your body. Those are your rules out there. And the question is, folks, which one comes first? It's like the cart and the horse. Is it your rules or your beliefs? Well, why don't we take a look at some of the information that's available to us out there. Let's take a look. This is Thursday. This means it is PGA Thursday out there. You know, they've got the FedEx Cup going on. And when you take a look at the PGA, it's always great to be able to go back. I love sports. Always great to go back and take a look at successful people out there and failures. You know, when you're in nothing better than, you know, a PGA tournament where one guy or one gal, you know, wins out there. Obviously in the PGA, you know, it's one guy out there. So let's take a look at Jack Nicklaus. You know, arguably could be argued as one of the best golfers, you know, that ever lived out there. And if you take a look at Jack, if you know anything about Jack's life, you know, he was a great amateur golfer. You know, in college, he was playing the U.S. Opens, playing the major tournaments out there, and played very well as an amateur. Now, he decided to go pro. That first year of going pro was kind of a difficult year for him. Take a look at his first tournament because he came off of a really stellar amateur career out there. In fact, Bobby Jones was really suggesting to Jack that he stay an amateur, just like Bobby was. But Jack knew that really in those days, in order to really play against the best, he needed to go play against the professionals. He needed to join the tour. That first tournament, folks, you know, and this is after coming off, he was playing some of the same guys, you know, as he was an amateur. That first tournament, you know which position he finished in, folks? That's right. Dead last. Dead last, his paycheck, $33.33. In fact, he really struggled until he got to the U.S. Open in 1962 at Oakmont, where he went up against Arnold Palmer out there. But, folks, you know what it is, and you can watch it in everybody out there. The question is, what comes first, your beliefs or your rules? Well, he had all the rules with regard to what shots he should hit, from what distances, how to play the game of golf. He had all of those rules. It was just simply his belief. And you see, once what happens out there is many times people just simply don't use the power of their vision. And the question is, you know, what comes first, your belief or your rules? It's your belief that comes first. And where does your belief come from? It comes from your vision, folks. And you'll watch it happen time and time again. When you see somebody actually break through and they win at something, it makes it much easier the next time around. Well, folks, all you actually have to do is vision yourself actually winning. You trade. You've got rules and you've got beliefs about your trading styles out there. If you don't like what's going on, all you've got to do is change your beliefs out there. You've got to change your vision. You know, if you take a look at golfers, you can just simply take it out, and then we'll go on to the markets here. If you take a look at golfers out there, you can watch them on television. You can see the folks that are coming down the fairways that have a belief. Which way do you think their shoulders are? Their shoulders are straight back, their chest is out, just as if they were going to go ahead and beat their chest out there. That is because you've got to have a strong belief. You've got strong physicality. Your physiology is about 60% of your whole belief system. What you focus on, you either focus on what you want or you don't want. Folks, I suggest you focus on what you want, and then it's your words. Your words are just simply going to be able to set up that additional belief system from within inside you. So if you are going out and you're tackling something, if you're just introducing yourself to somebody, make sure you just tap yourself on the shoulder, put your shoulders back, get up there, look like you are a winner out there, folks. Change your belief system. Make that your pre-shot routine. Let's go take a look at the pre-shot routines that we've got in the marketplace out here. You got the Dow futures trading up 75 points, the ES Mini up 9, you've got the NASDAQ futures up 16 points, Russell 2000 powering its way up into a resistance area. If we take a look around the world, now I got King Dollar up 4 ticks right now, gold trading up $11 out at 17.05, silver up 40 cents. That's up 1 2/10% this morning, out at 32.70. Over in Europe, you've got the DAX up nearly 100 points right now, up 98 points. The FTSE up 47. The Nikkei was green last night, just slightly turned green, up about 75 cents. You had the Hang Seng up 64 points. The Shanghai up 14. Green all around the world. Let's go start off and take a look at our ES Mini 30-minute chart. Let's pick up where we left off yesterday. We take a look at yesterday. We're just simply showing this downtrend channel that had formed, going really back, to a certain extent, really starting out at about 3 o'clock in the morning on August the 23rd. What happened here in this downtrend channel is you had a break out of it, and that break came in last night at about 10 p.m. Now, that real break came in, quite frankly, this morning at 4 a.m. That is right here. If you're watching us on TigerTV, and you see my chart here. If not, you can catch the archive of this show on Channel 9. When I talk about 4 a.m., you had the ES Mini trading at 14.08, moved up to 14.1150, kind of a wide-ranging bar, but all that it's really doing out there. So it has broken through, an area of resistance, but it really ran into the next area of resistance. And what's interesting about this market is it has become very complacent between the area of about 1,412, 1,413, all the way down to the lows that are in at about the 1,397 level. That range, folks, the ES Mini here, if you actually take a look at the S&P, we've been trading in a narrow, tight range for basically a month out there, and that is unusual. It's going to bust out one way or another. Most of the news is really out in the marketplace. We had Super Mario come out this morning. I think it was about 8:45 or so. He says just simply unlimited bond purchase. Of course, we knew that yesterday, in essence, because that news had already been out, so that was just simply old, stale news out there. You had the ADP jobs report come out. Expectations were somewhere in the 140 range. The actual number came in just over 200,000. You've got tomorrow, the last piece of news out there is really going to be the monthly jobs report, which is out each first Friday of every month. So we've got that to look forward to. And then we basically have all the news out there. Maybe after we see that, we're going to see a break in these markets one way or the other. If we take a look at the King, let's go see what King Dollar here is doing. We'll take a look at the dollar index trading out at 81.29. What has the dollar index here done so far today? And really, you take a look at the dollar index trading really where it closed yesterday. Yesterday, the close on the U.S. dollar index, 81.24. You're at 81.28. Seems like a little disconnect out here in the marketplace. We'll see which is going to win out. Is it going to be the currency wars, or is it going to be the equity markets, the futures markets out here? The U.S. dollar index this morning getting down to 81. That 81 going against the 81.03 level of May 21st. That was where you made 100% move of a move. 32,000 contracts down there. You came down and tested it with 13,000 contracts on the 31st. You came down this morning. So far, only about 12,000 contracts on the U.S. dollar index. Going to need a lot more to bust out that area. What is that all about? Let's go take a look at the currency war. Let's go take a look at the Queen. See what the Queen is doing out here. The Queen, again, riding up that neckline, just inching higher and higher, trying to actually get up and make 100% move of a move, which would take you up to that 1.27421 level out there. Right now, just having a flat day, picking up exactly where it closed off yesterday. Trade out at 1.25930, so not a lot of movement out there on the euro here this morning. If we go take a look at, let's go take a look at some of the other currencies. We haven't done that here for a while. Let's go take a look at what pops up here next. Let's take a look at the Let's go take a look at the Japanese yen. That has a little bit of strength behind it this morning. Ooh, interesting out here. If we take a look at the Japanese yen, we're just simply taking a look at the daily chart, folks. We're going back to the high at March 15th when it traded up at 84.17. If we're just taking a look at trend lines, you're going to go ahead and use your next touch point on June 25th. That high out there, $80.61. Now, when Super Ben, got Super Mario, we got Super Ben, Super Ben's Wild Rice, when he came out with the release of the FOMC minutes on August 21st, the yen really got strong. Didn't happen right away, but within about 30 minutes thereafter, you saw the yen really move down and move down right into that trend line. That trend line held. It was tested again. The following session was tested here on August 31st, last Friday, and held. Now what we are seeing here, folks, we are seeing the yen move higher, meaning that it is getting weaker. When you take a look at this currency pair, this is the U.S. dollar versus the Japanese yen versus the other way around. Kind of an interesting move out here. Why? Because when you take a look at this, what the yen has done is just simply come back into that 0.786 level. What you can see here is you can see this low going back to October 31st out at 75.55. You then see a higher low coming in on January 31st out at the 76.14 level. You then see another higher low as it pulled back into June 1st. You then have another higher low on August 2nd. And now it looks like the next highest low was on August 31st. Inch by inch, the yen is trying to get weaker out here, and going to have to pay attention to that a little bit later on in the day, because maybe now is the time, if you're looking to take a trade going long, meaning the yen getting weak against the U.S. dollar, and there are some ETFs out there for that. Let's go take a look and see what the pound here is doing. The Great British Pound right now really just trading sideways out at about $1.59 right now. 877-927-6648. There's our Super Mario music, folks. Give us a call. We'll be right back.
It's me, Mario!
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at tfnn.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's continue taking a look at the futures market out here. Let's go take a look at the real strength in the market. That's the Russell 2000. If we take a look at that this morning, you got up to a high of $820, $828.70, trying to get up and tag the swing point for May 1st, which was $829. Missed it so far by 30 cents. I suspect what we will see here intraday is another spike up on the Russell 2000. Get up over that area, you stay up over there, and that says the Russell 2000 would go ahead and run all the way up into the March 27th swing point. The low of that is 836, the high 850.60. It is up against some good resistance here. Look for the Russell 2000 to give you the first piece of information out there. If this is going to be a real break, folks, the Russell 2000 will absolutely lead the rest of the market up there. I don't suspect that's what we're going to see here just yet, but that is where you want to be paying attention to. That is on the Russell 2000, very close to testing a resistance area that goes back, happens to be May 1st. Not only is it a May 1st swing point, happens to be one of those shooting star candles out there. That is one of those Stevie inverted hammers on the upside. If we take a look at the Dow futures, the Dow having traded below its rising price channel. It has tested that a few times, testing that again this morning. That is what's holding it out. That's the resistance area. That's this bottom red line that you see out here. The Dow is absolutely the weak link out here, so it's going to be important to pay attention to the Dow. So you want to be focused on the Dow today. You want to be focused on the Russell 2000. Let's go take a look at the NDX. Let's go take a look at the composite. I'm sorry, the NQ. Give me a second here to take a look at that. The NQ trading out at 27.83. That is running into a resistance area as well. That resistance area really going back to the March 28th. I would say you could also look at the April 3rd swing point high. That is out at the 27.91.50 level. As well as the ultimate out here would be the test of August 21st. That would be up at 28.02.50. That's on your NASDAQ futures here. Let's round this off. Go take a look at the S&P future daily chart. See what it is doing. It is trading inside the May 1st swing point. The low of the May 1st swing point is 14.06. The high, 14.19.75. We'll see if it's got enough energy here to get up and over it. What it did do this morning here is it broke this little series of lower highs out there. It's above its most recent high, which was August 31st, but that is such an ultra short-term indicator. It's really one where I just really pointed out nothing that you would trade off of. It's going to be important today for the ES Mini to close back in above the March 27 swing point. That low, 1406, you're at 1411.50. But again, you go take a look at the daily, you can see, what the ES Mini, again, trading in between this 1413 down to the 1395 level seems like a comfortable zone. Why? I don't know out there. Let's go take a look at bonds, see what James Bond is doing here. Bonds trading lower here now with some conviction, not necessarily conviction with regard to volume, but pulling back here after making a 0.786 retracement. That's from the swing point high in bonds. You're looking at the July 25th swing point when they got up to 153.110. The low that was put in was on August the 20th. Now, what bonds did here, they came through the 0.382 retracement of that level, didn't really need to breathe. So they had a lot of energy, moved right up into that 0.618, and when it moved up to that 0.618 level, did it August 31st, and did it with conviction, moved up with some fairly wide price spread when you take a look at the close of the prior session, and got up to that 0.786 level, and now all it's doing is pulling back, it's resting. If we take a look at where it's likely to pull back to, let's just go take a look. Let's get rid of some of these numbers out here. Let's take a look at our retracement now from the low to the high. So if we take a look at that, you can see the 0.382 level, 149.09. I suspect that's where it wants to head to. You're at 149.27 right now. Perhaps as it gets there, it'll give us some type of indication. You want to take a look at an intraday chart. What you'd want to see here is, well, it's not necessarily what you want to see. What you want to pay attention to is what happens at that 149 level. That's nothing more than a dead cat bounce. That is on the 20-year Treasury note out there. If we go take a look at gold, let's go see what Goldilocks is doing. Gold trading out at 1705.80. Gold trying to get up to the 0.786 retracement off of its last high to low. The last high is February 28th, I believe. February 28th, you had gold trade out at 1792.70. That's also this little touch point here of the descending tops level. If we take a look at the exact number from that high to the low that was put in on May 16th, 0.786, 1735.50. So far today, gold getting up to 1717. Give us a call, folks, 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up to the races. You got the Dow out of the gates, up over a full percentage point. Right now up 137 points. S&P up 13, Composite up 28, small caps up 6, Microsoft up 25 cents, Intel up 23, Google up $6, Apple up $3.84 out at $6.74. Excuse me there. You got Google lead the charge up $6. Rand Gold, G-O-L-D, the ticker symbol, up 4.5%, up 4.57. Apple right behind them. Sears Holding, SHLD, up 6% this morning, up $3 and change. Men's Warehouse, MW, up 10%. They must be selling lots of suits out there. Let's see if they had some earnings release out here on Men's Warehouse. What do they have going on? They had net sales of $662 million versus $655. That's not such a big deal there. What do we see? Revenue, net income. If I can find a net income number. Don't see the net income. I do see earnings per share, 15 cents versus $1.09 a year ago. Well, the market is digging their forward forecast. Men's Warehouse trading up 11% right now, percentage-wise. That is a leader in the clubhouse. You've got Stanley, Black & Decker, SWK. I believe that's Stanley. Is that SWK? I got to take a look. Up about 4% this morning. Amazon trading up $2.50, up 1%. SanDisk, SNDK, up about 6% this morning. And Magic Jack, Call, C-A-L-L, up 7%. We'll take a look at some of those stocks. You've got Wolverine Worldwide, WWW, down, leading the charge on the way down 8%, off about $4. Verifone Systems, Pay, the ticker symbol, off 10%. OCZ Technologies, having a horrible day so far, down 25%. That's off $1.34, trading on $4 and a penny. We'll go take a look at that. You've got Warner, Chillicothe, WCRX off about 10% this morning. And if we take a look here at the DAX here coming up against the swing point high, its most recent swing point high, which happens to be August 21st. That high is 71.05. You're at the high of its trading session out at 7,099. That is up over a percent. That is up almost 2% this morning. That is also trading inside the March 27th swing point. The low of that was 7,075. It is Septemberfest over in Germany. If we take a look at the FTSE here real quick, the FTSE also up at its session highs. The FTSE getting back into the trend line that it was testing yesterday. That looks like now that was a false break. It was making the 0.618 retracement, which was down at 56.30, got down to 56.34. The FTSE getting back inside that trend line there today, out at 57.28. The FTSE trading up 1 2/10% here this morning. If we take a look at, let's go take a look at some of these stocks here that have been popping and dropping. Let's go take a look at Randgold. GOLD is the ticker symbol. Let's go see what is behind this move out here. That has a nice gap up. Let's take a look and see what it is going up against. Let's take a look at this. So this is coming up against the last time that it really gapped down, which happened to be March 21st. Let's just clear the deck here and start over. Also completing, looks like, let's take a look at the A to B equals CD off of the bottom. On Randgold, we'd start down at the low of May 15th, out at 72.91. That's your A point. Your B point is June 20th, out at 96.70. Pulls back into the July 23rd level, 82.52. Let's take a look at volume as this came through the B point out here. Let's see if the B point was taken out with volume. The day that we're taking a look at, and the volume would be 683,000 shares on June 20th. Let's take a look at that as the B point was crossed. It was not taken out with volume. You did have volume coming into August 31st, last Friday, there, 866,000. You'd already gotten past the B point out there. That B point had 683. You've done the one-to-one A to B equals CD. And again, that's coming up against a downdraft that had 3.8 million shares. Yesterday, you did 484. Today, so far, 146,000 shares. That could be a false breakout here as this completes its A to B equals CD pattern. It comes back to where it originally broke down, going back to March 21st. Let's go take a look at Men's Warehouse, up 12.5% this morning. MW is the ticker symbol there. That is gapping up, coming back into an area where it also broke down. This thing here has several gaps. Where it broke down most recently is June the 6th. June the 6th has 2.1 million shares, but it's really the volume on the next trading session that you want to benchmark. That volume there, 6.4 million shares, as it gaps down, gets to a low 28.48. That's after closing the evening before at $35. So that was a haircut. If we take a look at volume today, so far, 455,000 shares in the first 9 minutes of trading. Again, that is 469. It's going to be going against 6.4 million shares. You'll want to come back and take a look at this. Now, when this did come back, there's an original breakout here. So it looks like this really is setting up nothing more than a consolidation area. That consolidation area being the lows right around the December 6th low out there at 27.19. And I suspect that where we're going to take a look at the consolidation area is going to be in this $37 range. It's at $36 here right now. That is on Men's Warehouse. Let's go take a look at some of these stocks here that are dropping to the downside. Wolverine Worldwide, $4.60. The ticker symbol there, WWW. And if we take a look at that, gapping down here with volume this morning, coming back into the area where it most recently broke out. Now, that breakout, it's too bad that this is coming down with volume. You'd certainly like to see this thing pull back with lighter volume because there are several signs of strength out here. This is the first time in this stock chart here. Well, I won't say the first time. The first time that you actually saw institutional selling in this equity was July 12th. 2011 when it gapped down with 3.7 million shares. However, you did see some signs of strength in this. This first sign of strength was April 30th. moves up, wide price spread, accelerated volume, does that on April 30th, 4.7 million shares. You then have another wide price spread on May 2nd, 2012, pulls back into the area where it broke out. Did that on June the 18th, pulling back with 590,000 shares, and that was going against 1.5. Well, I was really going against 4.7 million shares. But coming into, really, when you take a look at a breakout, what you want to do, if you've got volume on the chart, folks, what you want to do is you can see this wide, I'm going to go ahead and explode this out here. So you can see the wide price spread and accelerated volume. You see that as April 30th. Now what you want to do is you want to go back to the candle where you've got just simply the least amount of volume. That's really where it's breaking from. So in this case here, wasn't the prior session. It was 2 sessions earlier. You can see how it had 668,000 shares. 38.57 was the high, and the low was 37.54. And if you take a look at what the equity did, it came back right into that area. 37.54 was the low. Got just slightly underneath that on June 18th. That was 590,000 shares. Going against that breakout that had 668. That was actually your indication to go ahead and take a long trade in this equity. Now, what it has done here, if we take a look at the A to B equals CD, off of the sign of strength out here, we would start off with the low on April 23rd, 34 bucks even, moves up into a high on May 3rd, 2012, out at 44.13, pulls back, and what it does is it does a 1-to-1 A to B equals CD. Didn't really give you any kind of bearish candle out there. What it did do may have made a 1.272 expansion. Let's go see if this thing made a butterfly pattern as it made its way up to those highs. Let's draw that in here and see what we have. And most certainly it made a little bit higher high. The actual 1-to-1 A to B equals CD on this was also making a 1.272 butterfly. So that was a reason to be cautious out here. Now this morning, gapping down, coming back into this area here, the most recent signs of strength out here. And that is what is holding it in place. That is on Wolverine Worldwide. If we go take a look at Verifone Systems, they were out with numbers last night, I believe. PAY is the ticker symbol. They did earnings per share of 34 cents versus 28 cents a year ago. Revenues, though, revenue's not bad. 489 versus 316. Must be the guidance out there. Let's go see what she is doing, what kind of volume is going on inside Verifone. PAY, again, the ticker symbol. Moving down with some volume. Let's go see what this is coming back into. Excuse me, coming back into the last... Well, it's coming back into its lows. Now, so far it has held the low, the most recent swing point, which is August 20th, at 4.8 million shares out there. Let's pull this back here. So it's trying to take that area on. If you get it closed below 31.31, which I suspect that you will, what this will do is at least run down to the June 15th area, down at $30.10. This thing does have some signs of institutional selling. You had that first sign April 30th. Gaps down with 12 million shares. Boy, they wanted to mark this stock down on May 25th. Moves down with 25 million shares. You have, another sign of weakness out here on August the 8th. You've got another one here today. Let's pull this back on the weekly chart here, see what this is doing. It's coming back really against this pot. So the last sign of strength, if you happen to be in this stock, I won't say sign of strength, what you don't want to see is a close below $30.25. I'm going back to the August 26, 2011 week. The swing point low there, 30.25, 11 million shares. But you're going to have that this week on a shortened week out there. You've already done 7.6 million shares, so I suspect you're going to have that. If you get a close below that, what this equity will do is it'll run all the way down to 14 bucks, and it's at $32 right now. So if you are in that, be careful out there. Let's go take a look at what else we have popping and dropping out here. You've got Wright Express. WXS is the ticker symbol. That is popping. That's up 7% this morning. WXS is the ticker symbol. Let's take a look at the volume behind the move. Also see what this is going against and what it's taking out. here. So we take this back. It's at the session high. It's at the looks like all-time highs. Let's take a look at this on the weekly chart, and it most certainly is. So everybody in this equity is having fun at the party. Now you had some. Let me refresh my screen here, make sure I've got the proper volumes. Had a big volume spike day with not any wide price spread. That was on the week of March 30th. 6.9 million shares. If you are in this equity at this stage here, you don't want to see it close below that low, which is 63.56 out here. Let's go take a look at, you want to take a look at the longer term A to B equals CD up on this thing? Let's do that. Let's see if it took out the swing point with volume. The 8 point on this goes all the way back to November 4th, I think it's November 4th, November 21st, 2008, $8.21. That's your that's your 8 point. Your B point is all the way up at May 13, 2011, $57.11. Now this thing here, if you're taking a look at the longer term chart on this, we take a look at the weekly retracement here. Looks to me like probably about a 0.382, absolutely. So you got a 0.382 retracement on this equity, and take a look at it. It's been explosive coming off of that C point, meaning that the move on the C to D leg stronger than that A to B leg here right now. Let's see if this thing took it out with the B point, took it out with volume on the weekly chart as we draw our line across. The volume at the B point, which is May 13th, 1 million shares, a little over 1 million shares on the weekly basis. And this thing here, as it takes out its B point, really does it with 951, 1.6 million on 210, so we'll go ahead and give it a pass. Came back down and tested that area. I got through with 2.1 million shares on June 29th. This has a confirmed A to B equals CD up on the weekly chart. That would take this equity to the $84.63, but I suspect based on the strength here, 97.88 is really the target. That is on Right Express. Let's go take a look at what else is dropping. OCZ Technology. So let's go take a look at OCZ, see what she is doing other than being down 24% here this morning. And let's see what is behind the move here on OCC. See if there was some type of revenue. So they've got revenue here. Conference call that's going to be going on. They say it says they see Q2 revenues of about 110 to 120. I don't see what they had originally forecasted. But let's go take a look. This is coming down with volume after making a nasty bearish engulfing candle. I did that on July 30th, folks. I was giving you the suggestion that you ought to be out of Dodge on this thing. Closed out at 767, of course, traded at 409, so giving you, in essence, about a 40% haircut from the time it gave you the signal to get out of this equity. Let's go see what this is actually coming back into. We'll switch this over to the weekly chart. So if we take a look at this on a weekly, it's trying to take out the swing point that goes all the way back to October in 2011, $4.14, 11 million shares. This thing is going to probably not have a problem doing that. Again, we're in a shortened week here, done 7 million shares through yesterday. I don't think my weekly here updates. So what does that set up? That sets up, let's take a look at the A to B equals CD down on this equity. The A point going back to the high on July 15th out at 1094. Your B point is October 7, 2011, 414. That is the swing point you're looking at. So just a 1-to-1 takes you to 325. That is if it takes out the B point from October 7th, 2011. The Dow up 144, S&P's up 14, small caps, which should be leading the charge here, folks, actually lagging right now, up 6 points. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks, and it is terrific Thursday out here. That means that following this show here, Tom and I do the Money Masters show. Then we go all the way out to Santa Fe, New Mexico, 11 to 12 with Kate Stalter for the Small Cap Roundup. Basil Chapman will be doing the 12 to 1 show today. That is the Futures Hour. Then 1 to 2, Daryl Martin in Dallas, Texas. 2 to 3, David White back here. 3 to 4, the Ken Shreve Show, the warm-up band for the Tom O'Brien Show, folks. So 9 hours of uninterrupted, with the exception of a few commercials out there, programming here at TFNN. Taking a look at the euro here right now. The euro simply not correlating with regard to the move that you see in the markets. You got the Dow up 148, and the euro most certainly trading off of the highs that were established here as Super Mario was going to save the euro here, I suppose, what we know is that Super Mario, he's hiding in the weeds, right? And we know where Super Mario is at. It's all the way back here, Steve's hammer candle. So watch for the euro as it gets down into that hammer candle, which is at, we're looking at a 30-minute chart out here, but that's where Super Mario is hanging out, folks. It's at 2:30 in the morning. That's my hammer candle, August 31st. The high is 125.015. The low is 124.925. If the euro moves down there, expect to see Super Mario going back to work.
It's me, Mario.
That's right, and supporting the euro out there. If we take a look at the King dollar here, not at its session highs, but certainly has rejected the swing point out here from May 21st. Again, that low was 81.03. It got to $81 even, Steven, this morning out here. So the U.S. dollar index also traveling in this downtrend channel. We'll see today if the U.S. dollar index can break out of this downtrend channel out there. If we take a look at silver, you've got silver trading out at $32.59 after making a 0.618 retracement off of the swing point low. The high that we're looking at when we take a look at the retracement, folks, goes back to the high on February 29th when it was trading at $37.58. Makes a run all the way back down to the lows. There was a super hammer. That was on September 26th. That low was $26.15. You did have a test of that coming back on December 29th, 2011. Got to $26.14 and a half. Did that on lighter volume. You then had an additional test that came down on June 28, 2012, as it got to 26.10. Those areas being rejected. So now you go from the swing point high, February 29th, at 37.58 level, all the way down to the swing point low on June 28th, out at 26.10. What you'll see is at 33.20 is the 0.618 retracement of that level. Silver getting up to $33.04. So, folks, for my work, that is close enough. Now, you don't have any kind of bearish indication here in the way that the way that silver here moved up off of this 0.382 level. What it did was it traded sideways, consolidated just for a few days, didn't pull back at all, other than pulling back to the bottom of this trend line, this longer-term trend line. You can see we've got that if you're watching on Tiger TV. It got down and it tagged that area, did that on August 30th as it got down to $30.19, and then ba-boom, found some more energy, some more fuel in its tanks, and moved up into that 0.618 level. We'll see if see how it trades today. This has the possibility of giving you a bearish candle signal today. Stay tuned, folks. Tom and I will be up next. You got the Dow up 152. If we take a look at anything else out here that is moving, you've got Market Taxes Holdings. They're now down 10%. They're off $3.35. And let's see, leading the charge on the way up. Where is Apple? Apple up only $1.37, not participating in this move to the upside. Stay tuned, folks. Tom and I will be up next. If you're off to start your day, have a great morning. Look forward to seeing you tomorrow, and take care. Bye-bye now.